Markets have turned green. ETH's pumping. Bitcoin's back above 100K. United States reached a tariff agreement with the UK. Bitcoin ETF data is up. Everything's looking green. But how do we take advantage of that via yield farming? That's what this video is going to be all about. My name is Crypto Noah, and per usual, none of this is financial advice. So I'm going to talk about what yield farming is, give a brief little market update, but definitely go and visit the Know It Alls YouTube channel because I just did probably the most in-depth macro video that I've done in a while. And I went into more details on all these things. And I'm going to give you the best strategies that you can implement via yield farming for bull markets. All right. Lastly, we did release the world's first crypto-themed album called The Crypto State of Mind. It's on all major music platforms. Links to that's in the description. And we're now also making songs for other projects. Sui just gave us the okay to drop Sui in Motion. So we're remastering it, and that'll be live here real soon. All right. So without further ado, let's jump straight into the video. Starting off with what is yield farming. And by the way, this mic does not work. It's just sitting here. I'm in a Airbnb here in Antwerp, Belgium. It's a pretty cool loft up here in the top floor. And it was sitting on the desk. So I figured, fuck it, why not use it? So yield farming is just a way to get a yield on your capital. There's multiple ways to yield farm. Staking on a money market platform, insurance platforms, staking on and there are even strategies you can deploy that combines all of those. But for the sake of this video, we're going to be talking about the most profitable way to yield farm, which is providing liquidity on decentralized exchanges and getting paid when the tokens you provided liquidity in are being swapped back and forth. So if we go over to Bitcoin, we're hovering at around $103,000 off of the bullish tariff news that, the United States have come to an agreement with the UK. It's not going to be 25% across the board. It's actually 10% for like autos. I went through it on the macro video. Definitely give that a video watch, like I said, but it's 10% for like the first 100,000 automobiles coming into the US, then 25% after that, and it's more details, but they still have the 10%. The UK only makes up 3% of trading with the US. So it's just like, I think the market's pumping off the news because they just came to an agreement, right? The market doesn't really like uncertainty. The fact that the United States came to an agreement with the UK, it's pretty reasonable to believe that they're going to come to an agreement with other countries as well. And I know everyone's waiting on them to come to an agreement with China. And the longer it takes for them, the longer this bull market will be delayed, I think. So when it comes to yield farming, there are strategies you deploy in sideways markets, in bear markets, and in bull markets. Obviously, the markets are bullish, so we're going to be talking about bullish yield farming strategies. So the first one is pairing a stable coin with the volatile asset. So in this video, we're going to use ETH as the example for all of these strategies that I'm going to go through. So the first thing you can do is use yield farming as a way to take profits. So like, for example, ETH is at 2,467 right now. So you could provide liquidity from 2,200 all the way up to 4,000, like previous all-time highs. So that way, once it gets here, you're accumulating fees and you're getting taken out of the market. Or if you want to still remain in ETH but not generate as much in fees, you can make your range from still the same bottom, but you can make the range to 7,000 and then you can take your profits when you get here. Or you can put the range to 20, 30, 50,000. Your fees are minimal, but it's almost like you have your ETH in a high interest savings account because the more it goes up, it's going to be selling into more USDC. But if you have your range extremely high, like from 2,000 to 50,000, once it gets to 10,000, you still have most of your ETH. You generated some fees, but you still get the benefit from the price appreciation. Another strategy you can deploy is what's called a tranching strategy. So there's a concept called time in the market versus trying to time the market. And this tranching strategy kind of optimizes that. And I've shown this many times on the channel. But this chart shows the value of 10K invested into the S&P from January 2003 to December 2022. If you were invested in all days, your 10K would be worth 64.8K. If you just missed the 10 best days, your performance is more than cut in half. Missed the 20 best days, 17K and some change. You missed the 30 best days, 11K. And guys, remember, this is in almost 10 years. If you miss the 40 best days or more, you actually lose money. So going back to this, people say don't trade consolidation, but you want to be yield farming in consolidation because it's easier to stay in range. So having the small one and the large one, you put a little less in the small one because you're going to get paid more. The tighter your range, the higher your yield. The small range allows you to maximize once the market is consolidating, like when it was consolidating here, when it was consolidating here and here and here. right? But having that wide range allows you to catch those large candles as well. So that way you can be in range on the best days of the market. So you can have some wide ranges, have a wide net to where you're catching it no matter where the market's at. And you have a smaller range where you're kind of re-ranging as price is moving up. And I don't worry about impermanent loss too much because I separate my portfolio into 3 different pillars: stablecoins, yield farming, and assets. And each one of these has their own time when they shine. Stablecoins shine when prices are cheap. You can buy assets at a discount. Assets shine when they go up because you can sell them for more cash. And yield farming is good all the time because it allows you to generate yield so you can have more stable coins to deploy and more assets to sell once they go up. So this portion of my portfolio, all I care about is staying in range as often as I can and getting a yield. So I can grow my stable bags and my asset bags depending on current market sentiment. That'll determine which one I'm adding to more. Now, the next strategy is called volatile strategy. This is a strategy where you pair ETH with another altcoin, right? And I think I like this strategy better in bull markets because a rising tide usually raises all ships. So if you pair ETH with, let's say, Pendle, you guys know I've been talking about Pendle Finance for a while. Pairing ETH with Pendle and ETH has been rising, but obviously ETH has been rising a little bit more. But if it was just ETH USDC, it's harder to stay in range because Pendle, albeit it's not moving as much as ETH, is still moving upward. And I think it'll eventually outperform ETH because it's smaller and the fundamentals are so strong. So it's like it can be a situation to where, let's say ETH and Pendle does a 3x, this chart will remain flat and you can be in a tight range, but your yield will be high because there will still be trading volume. But if they both do the same price growth or price dip, the chart will stay flat, which is good for you because you still get to stay in range. So now you just have to figure out which assets you want to pair with ETH or Solana or some main blue chip altcoin to get a yield. So you can go on Deck Screener and just kind of rank by volume. You can see the top pairs for volume. So you can see right now, ETH USDC on Aerodrome is the top volume pool right now. You have 306 million in volume. You only have 206 million in liquidity. So that's a really, really good volume to TVL ratio. If you have volume that's much higher than TVL, that's really good because you have less mouths and more food. The mouths is the liquidity and the food is the yields. Once you have volume that's lower than the TVL, well, now you have less food and more mouths, right? So ETH USDC on Aerodrome is really good. Sol USDC is really good. You can see this ETH USDC on Uniswap, right? Another way to find them is using our Yield Hunter tool. And we have a lot more features coming up on this here in the near future that I think will blow our competitors out of the water. But it allows you can just hit wrapped ETH and you can search it with your favorite altcoin. Let's say you like Chainlink, and it'll give you the top link pools, right? And obviously this number is going to be estimated because it depends on your range. So if you want to get access to this tool and you want to get access to a community with courses, coaching, tools, calls frequently throughout the week, and learn how to manage your portfolio like a professional, like a market maker, you got 2 options. You can click the link in the description and book a free strategy session with me, or you can click the other link and join our free community where you'll get access to certain videos before they hit the internet, and you'll get access to my market updates weekly, bi-weekly that I don't even put on the internet. And lastly, with your yield farming, what do you do with your rewards? Well, it depends on your portfolio, your risk, but in market sentiment such as these, I like to take my rewards, put some in cash, some in some altcoins, and I'll take the other half and compound it back into the pool so I'm getting a higher yield. But if you want to know what's best for you, book a call and let's chat about it. But with that, I thank you so much for tuning in. I love every single one of you who's watching, and I will see you in the next video. Take care and trade safe.